Kevin Rendino of 180 Degree Capital. Thank you so much for joining the Contrarian Investor Podcast today. Great to have you on. You have some contrarian views here, and these are contrarian because they are actually somewhat optimistic.
Our view always is investment success starts with the price that you pay for the business that you're buying. And if you look at valuations for most of the market, certainly the microcap space, many of these stocks are discounting all the bad news, whether it's inflation rates, the war in Russia, global supply chain issues. You know, the news is never great at the bottom. It just doesn't work that way. It's always darkest at the bottom. And so for us, when we look at cash balances, for example, they're at the highest levels they've been since 9/11. And if you look at cash balances across consumers' balance sheets or institutional funds, and you see where we are today, and you look back in history, we're sort of at peak levels. And the other peak levels were the beginning of the pandemic, 2008, subprime mortgage crisis, 9/11, and on and on and on. And so those are just signals to me that the market is discounting, we think, a lot of the bad news. And that doesn't mean that the news is going to get better tomorrow, but the market is a discounting mechanism, as you know. And so for us, the time for diversification and for being safe, that existed in November of last year. The time for getting a little more aggressive and for putting risk on is today. For me, I feel like we're at peak pain now. We're at peak pain in terms of inflation. We're at peak pain in terms of the supply chain. And I think as things ease, that's where you want to be going forward. That's where all the pain is now. But I think as you look out 9 to 12 months, semiconductors, servers, media companies that have undergone some advertising issues, that you want to play the cyclicality of the world rather than the safety.